Okay, got a lot to cover. It's been a very interesting market over the last couple of days. I want to welcome everybody to the How to Make Money Trading Stocks webinar. Joining us today is my research partner, Mike Traeger from Dallas, Texas. Hi, Mike.
Hi, everybody.
We've been missing you, man, on the show. I'm assuming you've got everything in your house fixed now?
Yeah, I think things are in good working order now, and that's been a problem the past couple of weeks, but I think we're done with that.
Okay, awesome. And so we're ready to get going. I want to remind everybody that what we do and what we share with you is for training purposes only, and that traders should always, if you're introduced to a new idea, new concept, new trading method, that always paper trade that prior to risking your own personal capital. I'm a very big proponent. Those who've been on the training webinars on Wednesday nights know that I'm a very big proponent of paper trading. It's just excellent practice and a good way to get up on the step when it comes to trading. We're going to be looking at some stocks today as you choose a little bit later, but at Active Trend Trader, we really believe in helping teaching a man or a person to fish. We show and we do training every Wednesday night for the premium members. This past week we did Psychology of Self, a trader's best friend or worst enemy. This week we're going to be talking about the three focus strategies that we are attaching to the active trend trading system. Hold on just a second, please. So we're going to be highlighting what those are and specifically how we're going to break down the trading capital to focus on those three strategies. I want to remind everybody that between July 16th and 18th, I will be presenting actually on July 17th, which is Saturday morning, real early. They gave me an early slot, but they did give me 45 minutes to talk, and we're going to be presenting on wealth building and income generation with index ETFs. And so if you're in the San Francisco area, come on out and have a cup of coffee with me first thing in the morning Saturday. So Mike, as I looked at the market today, I kind of went, we've been here before. This week, up and down, weak and strong. I was kind of in my mind's eye imagining that the market is acting a lot like a teeter-totter right now. It gets so high, but only because the person on the other side of the teeter-totter has hit the ground. And then vice versa, when the other one pushes off and the other side gets only so high until the other person hits the ground. And so what we saw in the S&P this week was basically a bounce to resistance, and today we're seeing a reversal down from that resistance. One of the things that's kind of interesting in both the S&P and the NASDAQ is that both are bouncing back down from lower resistance, and when we look at the charts, we'll talk about that. Russell has been holding up the best, and I almost wish the Russell would just finally get in gear with the other indices and do its thing to the downside. But looking up this week, Greece continues to be in the news. The Fed meets and reports out on Wednesday. What do you think the Fed's going to do, Mike? Or does it matter?
Yeah, I think they're going to keep kicking the can down the road.
Okay. So if they
at least for a few more months, they just seem to have painted themselves into a corner that they don't know how to get out of, and I think they're really, really afraid of what's going to happen with the markets once they start to, raise rates.
Yeah.
And they're just, unwilling to, face up to that, is my impression.
Yeah, I agree with that. And, the thing that's very interesting about that meeting, the Fed meetings used to really be a big mover of the market, and the last few times it has been less so of a mover. Maybe it's because the market knows the Fed has no bullets left in its revolver. I don't know.
Yeah, well, the whole situation kind of reminds me of the old story about the boy who cried wolf. I mean, for a couple years now, even before Yellen took over, you've been hearing them say, we're going to raise rates, we're going to raise rates, we're going to, interest rates are going up, and it's been 2 years, and nothing's changed. And I think that, and I may be wrong, it's my impression that there's just, fatigue setting in, and I think that the Federal Reserve has lost a lot of credibility, and maybe we're beginning to see the effects of that.
Yeah, and Dave just mentioned that IMF has asked the U.S. to not raise rates until 2016. And
yeah, that's Christine Lagarde, who I have my own thoughts about, but I'll keep them.
Okay, and so as you can see, I also highlighted this word, guessing. I mean, seriously, we mentioned last week that the market's being driven more by opinion than even news these days, and so it is a guessing game. It still remains a market where trading between support and resistance is a good way to go if you're going to be in the market. Now, individual stocks. There are some individual stocks. Gino just brought up AMBA. AMBA's been, on a tear. YY's on a tear, and so there's individual stocks that are doing well. At the same time, I think it's still a market to be quick about taking profits. And so if you're up 10, 15, 5, 10, 15, and if you have the luxury of getting up to 20%, you maybe don't want to start easing back, because eventually, even if the Fed says, okay, we're not going to raise rates until 2016, I would envision that would lead to a significant rally. But as we will see here shortly, these rallies are continuing on vapor. Here's a percentage of stocks above the 20-day moving average for last week that we highlighted. We were bouncing off down here about 40, 43 area. Today, well, it basically, here was last week. Let me see where last week was. 1, 2, 3, 4, 5. Here was Friday last week. And what did we get? We got a little bit of a retreat, no trigger on anything that we're observing at this point with the early warning alerts. And then you get this nice big rebound on Wednesday, and then a stall day on Thursday, and a down day on Friday. This downtrend here that Mike and I have spoken about several times, how fewer and fewer of the stocks in the NYSE are participating in the upside, continues, I think, to I don't know if I'd say plague the market, Mike, or when you look under the hood, it tells us that the market may not be as healthy as we think it is, or as some people think it is.
You stole my phrase there about looking under the hood.
Okay.
But this is one way to look under the hood, and keep in mind this is a daily chart that's going back a few months. It's even more telling and more significant if you you pull up a weekly chart that goes back about 2 or 3 years on something like this, and you look sort of the longer term, the percentage of stocks above like the 150-day moving average or the 200-day moving average, and you see the same kind of thing, but it's been going on, this big negative divergence in the number of stocks participating in the rally, for 2 or 3 years.
Yeah, exactly. Yeah.
And at some point, I mean, something has to give, and this divergence can only reconcile itself in one of two ways. I mean, either the indexes are going to have to start coming down in price, or more stocks are going to have to start participating in the rally, so that when we look at these charts, we start to see higher highs, and we just don't see that yet.
Yeah. I agree wholeheartedly, and what we have been seeing, and I think that this indicator shows us a lot, is see this kind of, I have circled this area over here, and I just call that kind of like the the meat grinder, the trash, the rubbish, whatever you want to call it, is where a directionless market. And this is after the rebound back in early June. We got a nice little uptrend there. But since then, since we peaked out towards the end of June, end of May, we basically, there's been a couple of, you get a rally for a couple of days and then a pullback, a rally a couple of days and a pullback, but it's all just kind of churning between levels of support and resistance, and we'll see that on the charts here shortly. And so, this is, and since we've been observing and studying this particular indicator, when you see stuff that kind of transpires like this, it's telling us that the market has not got a lot of oomph behind it. So let's see here. So as we see last week, here's the picture of where the markets were last week. And as you can see, the Dow is up a little bit from where it was last week. The S&P, this is as of 9 o'clock this morning. The S&P is up a little bit from where it was last week. The NASDAQ is actually down from where it was last week at this time. And the Russell just continues to be that trooper that keeps pushing, a little bit higher, but now it too is back up into its high resistance area. So we'll see what transpires from that, whether or not that's going to be, all she wrote for the NASDAQ or not. Let's take a look at the charts. So S&P, we drew this trend line up here. As soon as we started getting a little bit of highs here on the daily chart, we drew this trend line here, and as we see, we get a really nice rebound. And it turns out this is a rebound just below the 100-day moving average. This was Tuesday. They call this a one-day reversal. Got a really big update today, on Wednesday. We hit this level of overhead resistance or supply, some people like to call it, and put in a shooting star. Today, the S&P has almost been all downside. Now, even though this is not a very long uptrend, about 2 days, the candle signal may still be valid if today's candle finishes more than halfway down this big long candle here. We would have what's called an evening star, which is a bearish reversal signal, bearish reversal candlestick reversal signal. And so if we finish, like I said, halfway down, more than halfway down this big green candle here, that would be kind of negative for the market. On the weekly chart, what would we have? We've got basically, we're finding support down here about the 2064 area, 2070 area. We ran up this week, and now we're finishing basically right in the middle. If this finishes up where it's at right now, we'll finish right in the middle of the range for the week. Mike, you see anything here on the weekly chart that we should be concerned with?
Well, not to be concerned with. I mean, I think it's an interesting observation that, well, yeah, okay. I hate to I feel like I'm beating a dead horse when we bring up these divergences, because we keep bringing them up, but we keep seeing, week to week a lack of resolution. But if you look back in November and December at the upper price ranges for the S&P back then, we're still in the same price area. I mean, the market has essentially made no progress now for 5, 6, 7 months.
Yeah. And that was one of the things on one of the charts you shared with me. Oh gosh, a couple of weeks ago, and then I popped it onto the one of the market after hours reports. And it was basically talking about that as that, remember the old adage of topping is a process, while reversals are bottoms tend to be more event driven, where you'll get one single spike down on a weekly chart and bam, away she goes. but it compared the charts from on the NYSE from 2000 to, with the charts of the NYSE for 2007 or 2008, and there was a point, and both of them are very similar to what we're seeing now. There was a point where the market hit a high, and that was the high that was in place for then several months as the market zigzagged over here until it finally rolled over about 9 months later. And so even though Mike and I were saying, you know, topping's a process, we may be in that process right now, you know, we're not absolutely 100% sure, but all the things we're looking at on the charts right here, Mike, are telling me that, you know, well, clearly showing we're struggling going much higher. And so this could be the top in this particular bull market, and now we just churn and churn and churn until we either get resolution to the downside with a nice correction. You know, when I say nice, I'm talking somewhere between 20 and 50%. But the fact of the matter is we still don't know exactly when that should be or when that could be.
Yeah, you know, I agree with all of that, and it isn't it is not unimaginable that the markets could go down 50%. Oh, you know, that takes time. I mean, that'll take a year or two. It's happened before, and it very well could happen again in the not terribly distant future. You know, just based on how overvalued and overbought everything has become. But man, I mean, if we see you know, another 50% pullback after the last couple that we've had over the last 15 years or so, I think it's really going to shake a lot of people up. And you know, we've talked about, you know, the baby boom generation and the influence that our generation has had just due to sheer numbers.
Yeah.
Over the past several decades. You take away that much wealth from that, you know, that large a generation as they have entered into or they're approaching retirement, and what do you think that's going to do to the economy?
Oh yeah, I mean, you know,
when people just don't see those numbers on their monthly statements anymore. I mean, it could turn into quite a debacle.
Yeah, I mean, here I'm just going quick projection. Okay, there's 34%. That'd be NASDAQ of 3,000. And that's kind of interesting. Here was the all-time high on the NASDAQ up here at, why am I not moving? I hate it when I don't do that. There we go. Here was the all-time high of the NASDAQ back in 2000, up at 4,800. And so that would be down here. Give you a perspective on, okay, where would a 50% retracement be? Well, there's...
you'd almost have to go to a monthly chart. Go back a few years.
I'm not going to go to a monthly chart right now, but anyway, just...
Okay.
Huh?
Yeah, I just think about, you know, just a rule of thumb, and we've talked about it before with bear markets. You know, after a bull market, a bear market generally will take back about half the gain of the previous market.
Yeah.
And you know, if you just do round numbers on the S&P, I mean, off of the lows in 2009, the S&P's come up nearly 1,500 points.
Yeah.
And if you give back half of that, you know, that's about 750 points, and that'll take the S&P down to about 1,400. Which, you know, in a long-term time frame is nothing more than a realistic retracement.
Yeah.
But I think if the S&P were to start heading back into the 1,400, you know, 1,400 range, a lot of people are going to be very, very upset.
So there we go. There's 50% on the monthly chart, Mike. It's down there about, oh, let's see here. There we go, about 2294 on the NASDAQ. Interesting stuff. And you know, David makes a comment and says, "Yeah, you mean that much of the wealth will be given to the baby boomers who know how to swing trade." And that's an excellent way to look at it, because that is, you know, part of that. And it's not being mean or ugly, you know, towards people who you know, the buy and holders. It's just, you know, a matter of, you know, fact that if you're a little bit more knowledgeable, you're going to do better and know what to do. So let's take a look. We're looking quickly at the NASDAQ. We got a gap down this morning. That by itself is a bearish move. It didn't even get, the price action from Wednesday and Thursday didn't even get back up to the higher level. So we do have another now lower high in place. We had come up here and done a slight lower low up in this resistance area a couple of weeks ago. Now we have another lower low in place. If we close below the 50, then look for us to retest back down here at the 100, and watch for the price action as it hits this 100 level again and again and again and again. It will actually work as a sledgehammer or a jackhammer, if you will, and eventually bend that moving average over so that then the price action can, imagine this, just slip off the moving average to find lower lows, which would then potentially take us back down to here's the 40-week moving average, which equates approximately to the 200-day moving average. And a real quick just drop from that will give us some idea how far that is away. Well, where it will be in a few weeks is probably about there. So that's only a 7% retracement on the NASDAQ. Again, it too is doing one of those indecisive doji type candlesticks. And we'll see towards the end of the day, does it close below the 50 or not? Looking here, looks like the true strength is turning back over. The momentum on the daily chart is just is just really wishy-washy. And again, I won't mention the negative divergence here that we see here, but with the TSI just kind of moving sideways, it doesn't show a lot of impetus right now in either direction, and that's part of the issue that we have. We're not getting a lot of momentum going in either direction. The Russell, how's the Russell doing? Okay, Russell, as I said, the Russell has held up, I think, better than the other two indices, which is very clear. It's still up here above its shorter term moving averages. And we got a rebound on Tuesday off the 50-day moving average, ran up over the next couple of days, hit the high up in this resistance zone defined between about the 1275 and the 1267 level, and then kind of did what we expected it to do. It bounced back down from the resistance area, but I find it kind of interesting today. It is not, the sell-off on the Russell is not real healthy, Mike. So what's going on with the Russell, man?
I don't know.
Okay.
I don't know. Even if you look under the hood, I don't know. Yeah, it is holding up. It is holding up better than the others for sure. And we've talked before about the Russell being such a big index and more democratic than the other weighted indexes, yeah, like the S&P and the NASDAQ. And maybe potentially that's contributing to its relative strength. Interesting to note though on the weekly charts, as we're in this area of all-time highs on the Russell, we see, technically we don't really have a hanging man by the technical definition of a hanging man candlestick, but you do see in the lower wicks, attempts, some selling pressure. There are attempts to sell which are constantly being fought off, but the pressure is there. And that could be a tell for what might be coming.
Yeah, I want to highlight one thing here. Let me see if I can blow this up a little bit and move it over here. There we go. Here's what Mike's talking about: is we get in the sell-off pressure that's coming back down to levels of support, and then you get in the rebound. Well, this bottom portion of this weekly candle, which is just below the 1260 level, next week, that then becomes a nice trigger if this stays a small body. And Mike, that's pretty close to a hanging man. I think the wick appears to be at least 2 times the size of the body, and the body is up in the upper third. It's close.
Yeah, we're not at an absolute high. So
no.
I think that kind of graphic, visual example is better illustrated on the weekly of the S&P or the NASDAQ
Yeah,
charts.
yeah. And but anyway, the bottom of the body there, I'm trying to highlight there with the little hand, that then can become a line of demarcation for potential bearish trades. Like if we go back up and retest the upper level and then come blowing back down through that, not a bad place to be looking at a potentially thrown in some puts. Because as we see right now, on a daily basis, it's just not getting much traction to the downside whatsoever. So, any questions on the market, guys? Our other David online is saying that if we have a big crash were to happen, presidential candidates like Bernie Sanders would gain traction. And all I can say, David, is I can't speak to that because I don't know.
Yeah, I think that's a really good point. I think we could be in for a real interesting time in the next 12 to 16 months. If we get a good-sized correction in the middle of a presidential election.
Yeah, I think that could be it could lead to a very interesting 2016.
Yeah, I agree.
So let's go pop back over to here. And so, okay, just a reminder everybody that the active trend trading system, what we do is we basically follow the 5 pillars of trend trading. Is we identify what to trade, top quality IBD stocks and index ETFs. We show people when to enter, when to exit, what strategy to use. I'll come back to that just shortly, and what to expect. One of the things that I highlighted this slide last week, and Mike did some proofing for me. He and I kind of chatted through this. What we're trying to do with these identified strategies, which are very simple strategies, but at the same time, they fit well with the active trend trading system. I'll be sending out an email this afternoon that will have attached just a little bit better description, and then over the next 2 weeks, the stocks and index ETFs, that's what we've been doing all along. But we're going to be just doing some basic options in this wealth building and income generation strategy with a small portion of the capital that we're trading with. And this will be implemented by the end of June. That is this month. And this is the wealth and income generating. This is one of the things that I've been doing here. I've done this for several years, but I finally said, it's time to kind of like roll this out and make this part of the active trend trading system as one of the strategies. And what it is basically I bought a long-term January 2017 spider put because I think sometime between now and the next 18 and 19 months that we are going to get a significant correction. And then while I'm waiting, what I'm doing is I'm basically selling premium each week against that. So far over the 7 weeks that this position has been open, and I've bought 5 contracts at $21. And every week I basically sell premium against it. And we've been generating on average about $220 per week worth of income, which equates to about 2.1% on that $21. And so, and then what I'm striving to do is get the position where it's totally paid for, and then from there I can either use the cash for wealth building, in other words, letting my capital grow, or for income generation. Here's where we sit regarding all of our trades so far. We continue to bump this up. We had a slow, first 3 months of the year, and over the last couple of months, we were up about a little bit over $2,000 for that period of time. And we are running. We're not trying to be risky to meet our 40% return for the year, but as we progress through the year, the compounding effect should take effect here, and we'll finish off the year well. This week's picks: Celgene, SWKS and YY continue to be a trade for us. Here's the YY trade that we entered last week. Actually, it was last Friday, and it ran up really fast and took out our first T1 at $69 the same day that we entered the trade at 65.84. Well, it continued to push higher from there, and is actually now in when I updated this chart about, like I said, 9 o'clock this morning, it hadn't totally broken out yet, but it's actually broken back out above the 76.50 level. But this made an interesting place to go ahead and take some the additional profits because it appeared as if it was going to roll back down off of this resistance. And so we closed the rest of the position out on 610, which is a couple of days ago, as it pushed higher and then fell away from this resistance area. So on the remaining portion of the trades, we traded out at 74.89 for a 13.75% gain over, oh gosh, a little bit less than a week. Now, not all the trades work like that, but we do keep things where our projected losses are maintained, and typically we hit somewhere no more than 3.5 to 4.5% on any of our losses. So our objective with the active trend trading is to provide clear and simple trading systems for busy people so they can become wise, profitable traders. And right now, as a person who dials into this presentation, you can go to this website down here and jump in on an active trend trading membership for 40% off the regular price of $49.99, or the early warning alert system that Mike and I put together, regular $8.99 per year, and it's $349 for the year, and that's running 12 months, and so you save more than 50% on that. So, Mike, that's all I've got for today. What, you got anything else?
The only other thing I would add, I mean, you know, obviously you showed a couple of slides back, you know, the results for the year so far, and on the trades that have been done, and I think, you know, the results have been pretty choppy.
Yes.
But it's a reflection of, you know, the overall choppy market environment. And there's an old adage in trading, I think we have to, you know, both, you know, keep in mind both with the active trend system and also the early warning alerts, and that adage is that you know, you tend to make 80% of your profits on 20% of your trades.
Yeah, exactly.
And the other 80% of your trades, you make 20% of your profits. And when we back test it for the early warning system, that's kind of what we found. I mean, over a period of 13 years or so, you know, 45, 46 backtest sample trades, you know, there were a relative handful that, you know, were huge and produced really stunning results, and the rest of them were kind of mediocre. And what we're seeing so far this year is just kind of mediocre, and that's what happens until you get that one, you know, one or two big breakout trades, which is where, you know, you kind of, as they average in with the mediocre ones, produces a nice overall scenario.
Yeah.
And I think it's important to keep that in mind in this kind of a market environment, which can be, you know, pretty frustrating on a daily and weekly basis.
Yeah. So, well, that's one of the reasons why I basically am going to be covering those three focus strategy groups, because having that in the arsenal will be a great assist to funky markets like we're having now. And so I'm really, you know, I'm excited to provide the I'm really excited to be able to provide that, not only that training, but also those alert services and all that kind of stuff for those other expanded capabilities. And I know that, you know, there are some people who offer similar services to what we, you know, what we offer, And anytime they come up with something new, they basically put it out as a new service and try to charge more. And I'm not about that, and I'm not going to do that, Mike. And I'm basically saying, hey, we're trying to refine and improve products that are what is offered in membership, because I believe all our members are like family members to me, and so that's basically and that's why I'm not going to just all of a sudden slap something new on and say, okay, well, this is going to cost you another $20 a month or something like that. And I'm probably going and saying too much that I shouldn't say. Anyway, David has a question for Mike in relation to early warning alerts. Hold on, David, are you where you can talk to us? Where are you at? There you are. David, you're on air.
Okay, you can hear me?
We can hear you.
Yeah, so my question is this is about early warning alerts, and I was looking at the last 3 times that we had alerts or triggers, and that would be the 3 that have occurred so far this year. And then what I noticed is that they're all kind of equidistant apart, and so then I extrapolate forward to say, well, when should the next one occur? And then, so that kind of gives me a feeling for when I think the next one will occur, or at least the approximate area. But then I also went back and looked at those 3, and I said, how many days before did the downturn occur before the early warning alert? And then extrapolate that forward to say, when should that downturn start? And when I did all that, it looks like the downturn should start between today and a week from today. And I just want to know am I, I'm kind of looking at this as it kind of runs in cycles, and I was just wanting to know, does Mike agree with that, or does he say I'm putting too much effort on the cycle part of it?
That's a really, really good question, and it's something that we never really looked at or examined. For my own personal trading, I just tend to take things as they present themselves without trying to anticipate. You might be looking at it a little bit too hard. When we did the back testing, there were years when there were really only like 2 signals,
right.
And it wasn't such a regular thing like every 2 months or so. And I think what you're seeing now and what you're looking at is a very small sample size, and again a reflection of a sideways market that is bouncing back and forth in a very narrow trading range. What we're seeing now might be more of an anomaly than a regular or a common occurrence. I think it's a really interesting observation, but I wouldn't, personally, put a lot of weight to it in terms of, saying, well, in about 10 days we're going to get a signal, so I'm going to get my, my egg, my or whatever, my stuff in order and get ready to go. Because I don't know if it's going to hold, going forward.
What, Dave?
Yeah, and not even just a signal, like I said, coming up, but like I'm also looking at like within the next, like between today and 4 days from now, taking a downside bet.
Yeah.
Because, yeah. So anyway,
So,
and then I agree with you that it's too small of a sample size, except that before I was with you guys, there was a different service that I paid attention to since October of 2013, and they showed that same kind of cyclic motion of the S&P 500, where you would have triggers like this, somewhere, I'll say somewhere in the neighborhood of every 2 months. It's not exactly 2 months.
yeah. And one of the things that, because Mike did the initial analysis of the data that went back, like he said, 12 years on the, did we do the IWM or I think we did the IWM, right, Mike? Or we did the IWM.
Yeah, right. The IWM and the spiders.
And the spiders, yeah. And, and I did take a little bit of a look at the length of time between signals, David. And, one of the things, and I was basically taking a look at it for the major reason to find out, okay, what is my what was the max time over a 12-year period between signals? And like the max time was I think about 175, 180, almost a 6-month period.
Right.
And then what was the shortest time? And sometimes I was like two weeks. But the majority of them were in that in between those 2 points, the the shortest time and the maximum time. And so, yeah, we did not say, because we both adopted basically a philosophy of saying we're not going to try to overthink it or overguess it. We'll just wait until we have the legitimate objective alert or trigger, and then we'll go. Yeah. And we know what that one is, and I share one of them with you guys. The percentage of stocks above the 20-day moving average. But then we have some other proprietary stuff that provides us further confirmation and the solidness. So cool. Okay.
One thing, before we go here and get off this topic, because I think it's a really good topic, you might want to do a little bit of reading. Again, I've done a lot of reading about cycles in the market, short-term and longer-term cycles.
Yeah.
And on a very about the shortest cycle that I'm aware of is a 10-week cycle, which is roughly, a little bit over 2 months. And I, haven't been keeping track of that either the last few months or even the last couple of years. But if you want to do a little bit of reading about that and go back and look at some charts the past couple of years and look at it from the point of view of, about, 9 or 10 week cycles, there may be something there.
Right. All right. Thanks a lot.
Excellent question. Yes.
Yeah, great.
So, okay, folks, we'll see you next week. Have a great weekend. Keep the egg growing, and we are ready to look at some stocks. And so I don't know if you're going to hang around for looking at stocks, Mark, or bug out, but I will continue. I will go ahead and look at some stocks, and we'll go from there. And the Russell still is hanging in there. Oh, Mike's gone. So I'm glad he joined us today. So let's take a real quick look at, Tracy asked, what can we learn from Fleet Corp? What can we learn from Fleet Corp? Basically, Fleet Corp, Tracy, as you know, we were in it. When we were getting in, down here, we got stopped out, and then we get an immediate reversal. But even with that immediate reversal, this particular, let me blow this up real quick. Okay, this particular candle right here that we're looking at was not a reversal candle. We were making a new low. And so while it was down into a support level, there's no way possible to anticipate this big, huge, breakout that happens the following day. And for those, you just got to go, well, darn, we were stopped out and we weren't in the trade. And so it's now, this is showing some strength now. And so if we still like Fleet Corp, we wait for the next pattern to set up. Is basically, would I have done anything different? What was to do different? Because we never came back above this level of resistance at 151.82. And so there was never a signal from the time we got. I think we were stopped out on this day here. There was never another signal before this big gap up. Now, if you're a gap up trader, you can certainly trade the gaps, and this would have jumped up, and you would have been, it opened here at about 157, ran on up, and it's continued to run up from there. So AMBA had a nice move this morning, Aaron, but AMBA is getting, here's what's the challenge about AMBA right now. Yes, it is pushing higher, pushing higher, pushing higher. Here was the place we were trying so hard to get into AMBA way down in here, and even looked at it earlier in the year down in this area, and that would have been one heck of a ride. At the same time, you had very little that you could have done with AMBA. If you're already in AMBA, you're just in for the ride right now. You either take a little bit of profits off the table somewhere, but where exactly, who knows? But it's almost as if AMBA is starting to go almost hyperbolic, and eventually when those do that, will typically flame out and then fall and start providing additional setups. Right now, but we had earnings here. AMBA proceeded off from earnings and jumped even further. But look how hot AMBA is. It isn't even getting close to the 8-day moving average line, and it's totally respecting that. It is actually favoring the 8-day whole moving average. And so if you're in the trade, just hang on. And if you're not in the trade, just stand by. It will eventually pull back and revert to the means, which the purple line here is the 20-day moving average. The thing about it is we wait for the candlesticks to show us when it's going to do that. And right now, AMBA is not showing any weakness whatsoever. It's just adding and adding and adding and adding and moving higher. Aaron, are you in that? PAYC. Interesting looking chart, Tracy. It's basically, as you can see, not a lot of momentum. True strength is kind of heading sideways. It looks like it may be ready. If it pops back above the stochastics, or if this moves back up a little bit, that would give us an indication that we could jump on a trade on this, or a pullback and a retest of this purple line here, which is approximately the 50-day moving average. We get a retest there, and as long as but we need a better curve up, because what we're basically seeing right now is it came right up to this gap down. It came up to that resistance, which that whole area of that gap down window is resistance. And then it fell down to the 50 and moved up. I'd be looking, Tracy, kind of like the email I sent you last night, is that if you're gonna, if you're looking for this, is look where the lows are and then plan your trade there so that you can break, so it'll give it a little bit more momentum to break through these moving averages that then are starting to act like resistance. VRX. Jorge, how you doing? How's things in Colorado? Yeah, VRX is pretty simple. It basically, it did a breakout, it pulled back down, so now I moved my trend line up a little bit, and so we're either looking for a bounce down here at a support level, which is there, approximately there, and then a move back up above that flag line. And it looks like we've got true strength towards the bottom. Looks like it's putting in a little bit of a double bottom, but right now it has not, fulfilled a move to the upside. So it's raining all day. We actually got rain here in California earlier in the week. It was really wild. It was 105 degrees on Monday. I was out running. It was hot. And then Wednesday it rained. No, was it Wednesday? Yeah, Wednesday morning it just started pouring down rain. So what are the stocks we need to look at, guys? Okay, CUDA. CUDA was looking kind of interesting a little bit earlier on. As you can see, this is a perfect example of just a small flag down to Wednesday, bounces off the 100-day moving average, puts in a hammer, and then takes off yesterday and is now proceeding to continue to move higher. Will it make it back up in this area? Don't know. But if you got in down here, Tracy, that would have been an excellent place to get in, about 40 bucks for the move up. But as you can see, we're starting to get into, here's where we'll start initializing some resistance up in the 42 area. and then just go to the bottom of these candles over here to kind of try to define where the next strongest level of resistance you can potentially encounter. IBM, David, MLM. Martin Marionette. Martin Marionette, yeah, I mean, it tried to, this is basically what we call a flag failure or a bounce off the 50 failure. You broke through this trend line here, Jorge, and now it's falling back down to it. Now, will it fall back down to the 50 and then bounce from there? Occasionally, that's what happens. But this, in turn, is right now not a total failure of the flag line break, but it bounced up a couple of days on a little bit higher volume, but then is reversing lower right now. So there was another stock that was doing something very similar to this, and let me think if I can remember what that was. Oh, I know which one it was. I think it was this one, Noah. As you can see, breaks out, pops up, breaks this flag, pops up, hits a level of resistance, drops back down, and so we can alter and move the the trend line then to this lower high here, but then it breaks back out on Thursday, and it's struggling today. But again, it tried to bounce back up, got a bullish engulfing on this particular pattern, and away she went. Dave wants to look at IBM. IBM. I like the weekly chart better than the daily chart, David, because I mean it looks like it has made this bottom, this consolidation bottom, and is now looks like it maybe, you know, if this holds here at the what is that? That's the 100-day moving average. If it holds there at the 100-day moving average, and then moves up from there, we got a nice little hammer here, but we did make a lower low. So, are you looking to go long on that, Dave? Okay, yeah. QLYS almost looks like it is ready to short again. It has basically fell really hard down to the 200-day moving average, and now has proceeded to put in this uptrend. If I can draw the line in there, well, maybe I can, and maybe I can't. There we go. Got that flag line going there. If that fails, Tracy, we're probably going to look at a move back down at least to this support level here. So that's down to about 437-ish. That would also potentially set us up for a move back down towards the bottom of the moving average envelope channel if that breaks loose. But as you can see, it got right down to support, popped up, came up into the resistance zone made by the window, and now is retesting back down in this. As we can see on this move up, and once it got into this position, you had very, very, very little increase in momentum, and as you can see, the volume stayed exceptionally low. What we may be seeing here, and I'll show you just this little trick on the true strength, is oftentimes when a stock does is it falls down. True strength indicator falls down on the weekly basis. It's also the same as on the daily basis, but it will start to show some momentum coming back up. But that zero line acts as resistance, and when it approaches that zero line, oftentimes that's when it's close to rolling back over. So, okay. Jorge, you want to look at Avon? Okay. Seriously? So what kind of pattern do you see there, man? Hopefully you say, well, none. What's going on here anyway? Let me get back over here. Yeah, there's nothing there. That's interesting. Yeah, I oftentimes after a stock does its IPO and it's got 1 day worth of trading, I'll flip up a chart like this and say, this is not a pattern. So, Tracy, S-H-A-K, I'm liking S-H-A-K if. Now, this is one of those similar patterns that we saw with both FLT. We also saw a similar pattern with ARRS, and each is reflective of what can happen. As we see, we get a bounce back, then it kind of moves sideways for a while, and typically it's going to go either off this bottom consolidation. It's going to go one or two ways. It's going to either bounce back up to it, like we saw with Fleet, or we're going to do what we did with ARRS, where you get this consolidation, move up. ARS gave us a consolidation and a move down. So SHAC is doing kind of the similar kind of thing. This is where you basically draw it. Oh, hold on a second. Okay. Where we've got a well-defined level of support down here at about around 73 bucks. We've got a well-defined level of resistance up here in the 78 to 80 level, and not really a flag, but it's just bouncing around here, and it's going to make it, it will eventually make up its mind which way it wants to go. We'll take a look at the weekly chart, and here you've got a really nice, a much nicer kind of flag pattern going, and so it shows you where your support is, shows you where your resistance is. It has started to roll over a little bit. How much further will it potentially fall? We don't know at this time, but right now it's holding its support at about 73. And so, yeah, great question, Warren. Are these updates available for review on YouTube or in a paid membership? Yeah, I post these as a free review. Let me pop that up real quick over here on YouTube. And also I send out a note to everybody who has in fact signed up for these. But it'll show up here, and this is my YouTube channel. This is Market Tech Talk. And and Mike and I always post all the videos from this show here. So yeah, please subscribe, and if you subscribe here, and there's no fee for subscriber or anything like that, you get a notice whenever there's something new posted here, and there's going to be a whole lot of new postings going on in the near future. So, okay, I'm going to run through. Gina, I'm going to do these stocks, but I'm going to do them really quick because we're at the end of our hour. Tido. I fat fingered it. Okay, IPO, don't know. Think about the stock. Good buying volume coming in here. Can't even call this a IPO type of pattern, although it did put in this long flag back down to the 100, and away she went. And so it's breaking up. What kind of volume we get? Okay, but 1.2 million on this buying episode here. This must be a, what kind of company is this? Right now, I wouldn't do a lot with it, unless, one, clearly you've got some level of support here. So where it did its breakout, so you've got this support zone here. If it does want to, Let me get my pencil out. If it does one of these things where it pulls back into here, and that would be your indication that it might of a potential good entry. Moby. Again, getting a really good bounce off. Low cost stock. This is don't know a lot about it, but you got this rebound here, and away she went. This must have been earnings related, and it looks like it was. So yeah, about 2 point. So something's going on with the company. Who knows what? And so again, another IPO. Now this would be a more, you can see this flag here. It rebounded from there, but that would have been right about earnings. But you could have looked at taking this trade here as it came back up through the moving averages that we like to take our trades off of. Shop. Well, you got your eyeball, Gino, on the IPOs. Right now, we do not have an IPO base to come off of, but it did make a nice move here higher. I would wait. It's only been open for 1, 2, 3, 4 weeks. I'd be looking for a pattern to emerge. Another one that also did something like this is not Habit, but GoDaddy. I think it's a GDUI. Again, it also made a really nice move, and now is retreating into a pullback. So KRNT, last one, folks. Yeah, all right, definitely worth keeping an eye on, but right now it is, it's got a nice move here, up off of this little, downtrend here, popped up, hit the high, and now it's base building. And again, I do not know anything about the stock, and so you'd have to do the stock checkup on it on the IBD IBD website. So with that, guys, have a great weekend. I'm glad to be able to chat with you. And again, please share this meeting with your friends and tell them to tune in, or at least watch us on YouTube. So have a great weekend. God bless.